Hello and welcome as today is Saturday and the first day of June 2019. My name is Derek and welcome to the Money Charts channel. All bets, trades, and of the like. Well, that's within each's own risk reward. For myself, risk reward management is always job number one as we see Bitcoin prices in at 85 and a quarter as the price is nicely and well overextended above the 18 average of highs. And I want to start off with a question, two questions actually, from Smooth Operator. Don't you think we already came up too high and too fast to be reaching 10,000? No, I don't. And since everyone are expecting it, why should it go there? And I really don't like to answer a question with a question, or even for that matter, multiple questions. But I don't think everybody is expecting it. If there was 17,115 people expecting all the same and zero expecting else, okay, well, that's being literal, but that is actually going there. And also, in reality, if a lot of people are seeing the exact same thing, then sometimes that just becomes a self fulfilling prophecy. But I've heard a lot of people on the way up already saying, you know what, it's up too fast. So the question that I really want to ask is, why would you think that all the stuff I've talked about in the past to be wrong this time? It's almost like saying, why do I expect the Houston Astros to win more games than they're going to lose in July and August? And most certainly I do. In that, of course, playing the probability. And of course, if you are new, you will be seeing in time of the reason why. So overextended. Nicely above this 18 average. Where were some other spots it was nicely above? Here, 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 here. Yeah, so no, yeah, when these things go, they obviously can go. Things I have said quite often in my videos in the past. And what I have done is I have taken the data on the weekly term time frame and I put it into a spreadsheet. And I wanted to track a graph of how much the price action is either above or below the 18 average of highs or lows, depending on which one it is. I drew it up very quickly, but the blue line represents what percentage it is above the 18 average of highs, and the orange one below it. For this, what I'm going to do is I'm going to just change this to make this a little bit better. The first thing I want to do is I want to change the minimum so that I cannot see when it's above zero or at zero. Positioning, I want it to be on the other side, the right hand side. I go there. And on the numbers, I want to be in percentage format. And I definitely don't need decimals. So there we can see here that this is about almost 50% above the 18 average of highs. And this is coming off a time it was on the same equivalency, not 50% below. It's high divided by low doing it. So it does the equivalency move. So far it has went up not as much as its overall rate of decline that it had. Of course, that was just a ferocious one down. The move higher hasn't been as much of a ferociousness to it. And again, that's another word that I don't think is one. But back here, this was 2017. It gets above it, not quite 50, and has its correction. Another move, a little bit better than this, or so far almost at the 50 number, pulls back. And then, of course, this last mover just keeps on going up. So I'll repeat some things I've said before. I'm going to keep repeating these over and over and over again. As long as people are still willing to be buying at the prices that are being offered amongst the bid ask prices, which outweigh the sellers amongst the midst of all accumulative buyers and sellers over a decent period time frame, then the market is going to go up. Just because a market is overextended doesn't mean it's not going to remain so. In fact, oftentimes it can tell you that it will oftentimes do that because the buyers are most certainly in control in those situations. Yes, it will top, and that's a guarantee. But by trying to be the ones and picking tops and saying that this is where it's got to stop going up, you could say it was up too fast in here when it was at like 1260. Oh, it's up too much at 23. Oh, it's up too much here, up too much here, up too much here, up too much here. I told you it was up too much. Well, you can keep on guessing and you'll be right that last time. But when we even look further upon this, let's take a look at less candles. How overextended is it? Big green move up, three sideways moves. So a little bit of small correction, almost like taking like drinking Gatorade on the fly when you're playing in a hockey game. Just a quick 1 minute line change and a serious corrections like an intermission or whatever. Just a longer, more extended break. One, two, three decent green candles in a row, but this one is slowing down a little bit, and it's a sideways week thus far. And this week is almost over, given that it's Saturday and tomorrow is the completion. So a little bit to slow it down, but that's just it, a little bit. And the buyers, of course, in full control. And in regards to the confidence level of hitting that, when we look back at dozens and dozens and dozens of sample sizes of the past within these situations, what's the likelihood? After having a spot where it manages to break the 38.2% threshold, whether it be instantly, via that of finding support or fast move higher, what's the likelihood that it actually completely misses, pierces below, hits it exactly, pierces it above, or even breaks it completely fast after that, just even get there? But in another way of saying, what's the chances that at least gets to what's a decent pierce below? We're not quite there yet. We're almost there, like 9,200, 93, 94. But even then, when it gets there, what's the likelihood that it's going to be below or above this line? And I don't know why, but oftentimes they're more often above the line. But it's going on history again. In 60 game sample size, I'm expecting the Houston Astros, even a 50 game sample size, I'm expecting they should easily win 26 of them. Easily. Maybe not, but they're just too good of a team not to. And this has just got too good of a history within it not to. So I hope that answers your question. And I know there's a lot of new people, and I do need to go over that because, I mean, one of the things that was mentioned which makes it so funny amongst that comment is everyone is expecting it to go there. Um, the mathematics on this, no, not, well, the mathematics is high divided by low to the root of point, in this case 618, multiply the low, which is about 3140, and the high is about 19,600 or so. And the out of one of every 100, or no, that's too low of a number. Out of every 10,000 people who actually start or look at charts of markets and are not stricken to simply short-term day trading, then they don't probably look at Fibonacci. Not too many of them this way. One of every, or I guess you could say one of every thousand, maybe one of every 500, 1,000, 2,000 people, because the vast majority of people that calculate it incorrect. They do high, subtract low, which would be, well, 20,000 minus 32. That would be like 16,800. So now we're getting a linear differential. And then we multiply that by the percentage. So that, again, that just shows you that if you understand mathematics to the point very well, then you should most certainly understand that. And And in a game that is so mathematical, it surprises me that it's 2019 and the trading community still can't figure that out. But anyway, this market on the daily term time frame, when you look at that, by no means is it overextended. In fact, it's barely above the 18 average of highs. It's been correcting this extremely, extremely well. And viewing this again with more periods, just the magnificence of it, the monstrous move down, of course, larger rate of descent that this has been as a rate of ascent so far as how volatile the moves. It's just this has been longer in duration than this was before. And after establishing a lot of time in here, and one of the things from my teachers, Brian Shannon from Alpha Trend, says markets take a long time to heal, more times than not. Well, this was a long sideways consolidation, enough where it did build a lot of energy. And in this case, it's used a lot of it, but or it's used a good some of it or some of it. But how much is left? These markets can go so crazy. But the thing of note within Fibonacci levels or resistance, well, yes, they're resistance and support, but within these key levels, and whether it's this or almost any key level, whenever they are not breached as support or resistance, and on the case up as resistance, then expect a relatively quick move to the next one, although you could support it. And to a degree, this kind of did pierce above support it, which is a very rare thing for that. Usually it's resistance in some form, albeit through price or through time. Time would have been coming up here and maybe ranging between 46 and 5,000 kind of deal. And through price, of course, might be going back down to 44 or 4,000 in that area. But the next one is a fast move to the next level, which, man, you know what? That was a lot slower than I was hoping for. So when people say it was kind of fast, yes and no. I mean, from point low here to point high here, that was fast, but all of this sideways correction in the meantime. And now, since this point high, well, let's put this into perspective. This high was hit at like 83, 84. So we're 3% higher than where it was on May the 14th, or close to 3 weeks ago now. And from that point, it's had one price correction. And I mean, what do I say about this? Did it, I mean, one market, this one, it well pierced above it. On Bitstamp, it well pierced below, down in here. And on Bitfinex and all the tethers on the exchanges, like on Poloniex and Binance, it didn't even go down below 7,000, or much below 7,000 if it did. So it had its price correction regardless of how you look at it. And then a little bit of up move, a little bit of correctionary move, a little bit of up move. And even as it's playing it right now, 1, 2, 3 days of going sideways, a outside day where the market first broke higher and then made lows, but just back to where it's supposed to go, where it came from, and then instant rebounding up to the 18 average of highs. And what do we see in today's session? Well, the high is in at 8,618, the low is 8,452. The first thing I notice is how you barely can see this candle. So extreme microscopic volatility. Well, the difference is a little over 150 points, around 2%, which is, when you figure this update was 3.3%, and then there was a little bit of extra volatility. Man, that looks, can I even, really, this is 2%. I suppose. I mean, this would have been a bit more, but the fact that it's hanging in there at the 18 average of highs for this whole day, that's a strong move, showing that it's holding its gains really well. After all, this didn't hold its losses at the bottom end, and that's what happens in bull markets with a lot of these sell-offs. They're guilty until proven innocent. And as we can see it via the 4-hour term, that there's your up move, all the sideways consolidation, and barely breaking out above, having a noticeable break below. And of course, that would lead to, and I'm going to just draw it in quickly here, the failed breakdown situation. Now, within it, What I need for it to do is get back above it fast to consolidation, which it hasn't done that yet, if it's going to. What it has done is managed to get up to the 18 average of highs, and it's now staying there for the four consecutive periods now. Three confirmed completed, the last three. This one so far, so still the same. We're almost at the halfway point with 27 minutes to go in the 4 hour period. So it's hanging in there. That's a positive sign. When it's ready to go, it's ready to go. I'm looking for support at the 18 average of lows. That'd be about 83.93 short term. Because the overall thing that's important is that this low to this high, finding that high or low. The places, I mean, it can go below the 18 lows. Oh no, it's below. I mean, that's how you see it hold and stay above it. Because as much as I like the 18 lows to hit at 84, really the where it came from areas like 83, 25, and 30, and a little bit below is just a little bit below. And for it to get back into congestion area, pretty much is the area of between 8,600 to about 8,750 in this area. Will it get there today? Maybe, maybe not. If we take a look at this on the shorter term, do we see any evidence on the hour term time frame? No. After this nice move up in here, getting back to that level, there's your 18 average correction. It's just hanging in there, really even lowering its volatility as well. 15-minute time frame showing a little bit of choppiness as well as we go above the 18, below, above, below, resisting it, but still just barely below. Hanging in there, nothing too exciting going on at that point. So again, another video spending a long time on Bitcoin, 16 minutes. Wow. Quick little look at Tron, and that'll be it. On Tron's 15, yada yada, an uptrend, so it's got something going on. Our time frame well extended above the 18, having its break out at 1900 hours last night. And some correctionary phases along the way. Looks like it's enduring another one right now. 4 hour time frame has managed to come up to this previous level of resistance. It's hanging in there, doing very well, and looking to break it out, but it's got a long, long, long ways to go. If we're looking to go back to where we came from, coinciding with the 18, I'm looking at the 400 and maybe a little bit below amongst this term time frame. But on the daily term, this is where we can see it came up to this general area. Let me move yet another annoying ad. And you can call this an inverted head and shoulders. I'm not going to, though. Left shoulder, head, right shoulder. I'd rather call it a cup and handle or an inverted whatever for a bullish one, a bullish cup and handle. And the situation here is from this low, you come up, establish this level of resistance, amazing correction for about a week and a half or more, maybe, amongst the 18 average. There's a breakout above it in here, albeit it only barely breaks above this here, and it matches, pierces below this high. But a little bit of correctionary phase, and that's just it, a little bit. 1, 2, 3 days, 4 days rather, of moves within the counting this high day here of correcting it. And today's session, just a large green candle break above to this level. Now that that's the case, because before when we had the move, it was all about, okay, so here you have this break. You need to see it hold. And I just don't drawing it because that's where the line is, because this is where it is. Well, now that it's had a move just to where it was, not even that of a higher high, but just a matching high. I want at least an ascending triangle. I don't mind matching highs and higher lows. So for higher low, I'm looking at this general area here. And that comes in at about 400. So a little pierce below 392, so be it. That would be all in that same general area and fine and dandy. Breaking out above this point, weekly term time frame, this is where it gets very interesting because it is fighting a bear market situation. It is at the 18 average of lows, but how many times have we seen it go to the lows and then just keep going? Well, the next area I'm looking at is the 18 average of highs. And on this, that comes in at about 520. So that gives us an area for where we may see some sort of level of resistance. We got like nothing here for the 18 on the monthly, which means it is just starting out. So 500, that looks like a reasonable spot to where the next leg higher would go. Maybe it could even go up to 523, but even if it pierces below 480, 486, oh, that would make sense as well too. Thank you for tuning in and have yourself a magnificent day. Bye-bye.